Have you heard the pitch? Refinance now and save $100 a month. That's $1,200 a year or $12,000 in 10 years. Sounds tempting, right? But here's the truth. Those savings can be buried under hidden fees, like appraisal costs, closing fees, and title insurance that eat away at your potential gains. Imagine paying thousands upfront to save just a little each month. Most homeowners jump in without knowing the full story, and banks love it when you do. In this video, I'm going to reveal why that $100 a month isn't what it seems. You'll discover the real cost of refinancing, the sneaky traps lenders don't want you to know about, and how to calculate the true break-even point to see if refinancing is actually worth it for you. Stick with me until the end, where I'll reveal the exclusive workbook I use to find out what's called the benefit to borrower. This tool lets you plug in your details, your current rate, the offered refinance rate, and all the hidden fees to see exactly when refinancing makes sense for you. Don't let slick marketing and fancy radio ads fool you. What sounds like a smart move could actually drain your finances over time. Stay with me, and I'll show you how to protect your money and make decisions that truly benefit you in the long run. Mastering Mortgages with Yatin, where we turn complex mortgage topics into simple, actionable advice. I'm Yatin Karnik, and if you want to make smart refinancing decisions in today's market, you're in the right place. Hey homeowners, refinancing when rates drop sounds like a no-brainer, right? But here's the catch. What if that no-brainer could end up being your biggest financial regret? Beneath those lower rates lurks a web of hidden costs designed to make you pay more in the long run. Imagine this. You're lured by the promise of saving $100 a month. But beneath that shiny surface lies a tangled web of hidden costs, fine print, and lender tricks designed to keep you paying more in the long run. Today, we're going to expose the real story behind refinancing, a story that the ads and the radio spots won't tell you. Think about it. Refinancing companies and lenders are businesses, and their primary goal is to make a profit. They're not in the game to save you money. They're here to maximize theirs. And they do it by dangling the carrot of lower monthly payments, hoping you won't dig deeper into the costs and consequences. In this video, we're going beyond the surface level. We're diving into the murky waters and those sneaky costs that get buried in the fine print. I'll reveal why refinancing could actually be a financial trap, and not the golden ticket it appears to be. But here's the twist that no one talks about. Those fees you're paying upfront, they're not just one-time costs. They impact your break-even point, your home equity, and even the timeline of when, if ever, you'll actually start saving money. You might think refinancing is putting money back in your pocket, but in reality, you're paying to save. Imagine paying thousands today just to save hundreds over the years. Does that sound like a good deal to you? Most people don't realize they're playing a long game, one where the odds are stacked against them. And it's not just about money, it's about your financial freedom, your peace of mind, and your future. What if refinancing means you're resetting the clock and adding years of payments that you thought were behind you? What if the fine print you didn't read means you're losing out on equity or paying more interest in the long term? That new loan might feel like a fresh start, but it's also a fresh start for the bank to start charging you all over again. Let's be honest. The process seems straightforward, but have you ever wondered why it's so heavily advertised? Why do lenders push it so hard? It's because they know most people won't do the math, won't ask the hard questions, and won't calculate the real cost. Today, I'm here to make sure you don't fall into that trap. I'll show you the hidden side of refinancing, the parts that don't make it into the flashy ads or the glossy brochures. And by the end of this video, you'll know exactly what to look for, what questions to ask, and most importantly, whether refinancing truly benefits you or just the lender. So, if you've ever felt that nagging doubt, if something about the refinancing pitch doesn't sit right, trust your instincts. There's a reason why so many homeowners regret their refinancing decision just months later. And if you've never thought twice about it, that's even more reason to stick around. Because the truth is, refinancing isn't always the smart move it's made out to be. And the consequences of jumping in, without understanding the full picture can be costly. I promise you, by the end of this video, you'll be armed with knowledge that could save you from making a decision you'll regret. Let's clear up one thing right away. The people who locked in a fixed rate mortgage near 3.5% a few years ago, they're not rushing to refinance. Why would they? They've got a great rate locked in for the long haul. But there are two groups of homeowners who might be considering refinancing right now, and you might be one of them. The first group, like me, are those who took out an adjustable rate mortgage, ARM, back in the day when rates were low. But now, with rates on the rise, those arms have reset, and suddenly the payments have skyrocketed. The second group are those who bought their homes in the last couple of years, when rates were higher than what's available now. So let's dig into these two scenarios and see if refinancing makes sense. Has your ARM just reset and your payments skyrocketed? You're not alone. I've been through the same. My ARM rate jumped from 3.5% to 8.5%, almost overnight. And it's been a harsh wake-up call. I'll be sharing real-time updates on my journey to manage these costs. So stick around if you want to see the steps I'm taking. And if you've experienced this sudden payment shock, drop your story in the comments. Your experience could help others avoid the same pitfalls. Refinancing into a fixed-rate loan might seem like a safe bet, but be cautious. A slightly lower rate doesn't guarantee savings. It often means starting a new 30-year loan, adding more costs in the long run. Imagine this. You've already been paying on your ARM for 5, 7, or even 10 years. Now, when you refinance, you're not just lowering your payment, you're adding those years back on to the life of your loan. You're extending your mortgage clock, and with it, the amount of interest you'll pay over time. Think about all the extra interest that accumulates over those additional years you just tacked on. Ask yourself this crucial question. Do the short-term monthly savings really justify the long-term interest you'll pay? You might feel like you're gaining short-term relief, but what about the long-term cost? This is exactly where many homeowners fall into the refinancing trap. Now, let's talk about the second group. Homeowners who took out a mortgage in the last couple of years when rates were higher. If you're in this group, you're probably looking at today's slightly lower rates and thinking, now's my chance to save some serious money. But before you jump, you need to do the math. Yes, your monthly payment might go down, but at what cost? If you refinance, you're likely extending your mortgage back to a full 30 years, even if you've already paid off 2 years. That's not just extending your payments, it's resetting your financial timeline entirely. Let's compare both scenarios with an example. Say you took out an ARM 7 years ago. Your payments have gone up because your rate just reset, and now you're looking at refinancing into a new fixed rate loan. Your instinct tells you that locking in a lower fixed rate is a win. But let's not forget those closing costs. Appraisal fees, lender fees, title insurance, and more. They can add up to thousands of dollars, which often get rolled into your new loan, making your balance even larger. Now, think about this. Not only are you paying interest on your original mortgage, but you're also paying interest on those fees. Or consider the other scenario. You bought your home 2 years ago with a higher rate, and you're tempted to refinance because today's rates are a bit lower. You'll probably see an immediate drop in your monthly payment. But here's the catch. Those 2 years you paid are gone, and you're back to a 30-year clock. You're not really saving. You're just spreading your debt out over a longer period. And that means paying more interest over time, especially if those refinancing costs are rolled in. So, let's break it down simply. Refinancing can be a short-term band-aid that hides a long-term burden. You have to consider 3 crucial factors. First, how much is the rate reduction? A tiny drop in rate doesn't always translate into significant savings when you factor in all the added costs. Second, what are you actually saving on your monthly payment? Sure, a lower payment feels good now, but remember, you could be paying that for an additional decade or more. And third, and this is the big one, how much longer are you extending your mortgage? Are you okay with paying off your home well into retirement just to save a little each month now? And don't overlook those closing costs. Every time you refinance, you're hit with a wave of fees that don't just vanish, they either come out of your pocket now, or worse, get added to your new loan balance, meaning you pay interest on your fees for the life of the loan. It's like paying for your own savings with interest. Does that make sense? Probably not. If all of this feels overwhelming, don't worry. You're not alone. The good news is that you don't have to figure this all out on your own. Stick with me until the end, because I've created a worksheet that makes it simple to calculate the true cost of refinancing for your specific situation. You can plug in your current rate, the new rate, all those pesky fees, and see exactly when, if ever, refinancing actually makes sense for you. No more falling for slick sales pitches or fancy marketing. You'll have the tools to make a decision that benefits you, not just the bank. Refinancing isn't just about getting a lower rate. It's about navigating a minefield of hidden costs. Appraisal fees, title insurance, lender charges, it all adds up fast. What seems like a good deal on the surface can quickly turn into a financial pitfall. Appraisal fees, often mandatory in refinancing, can cost $300 to $600 or more depending on your property, adding to upfront expenses even if the refinance doesn't go through. Title insurance and settlement fees are unavoidable, even if you had them when you bought your home, adding another layer of costs. Lender fees, like origination charges and discount points, are often hidden, but can total thousands, making a seemingly lower rate much more expensive. Then there are the small but sneaky fees: credit reports, recording, flood certifications, and tax services. Alone, they seem minor, but together, they're death by 1,000 cuts, quietly draining your savings. Here's the real kicker. Many of these fees can be rolled into your new loan, which sounds convenient, right? But when you do that, you're not just paying the fees, you're paying interest on those fees for the life of the loan. Imagine paying interest on your own fees for 30 years, turning a simple refinance into a costly trap. Hidden fees aren't just expenses, they're financial quicksand. And think about the psychology behind all of this. Lenders are betting on you not doing the math. They dangle the carrot of a lower payment and hope you'll gloss over the fees. They use terms like points, origination, and closing costs to make it all sound normal and routine. But in reality, it's just a clever way to hide the true cost of your decision. By the time you realize how much these fees are eating into your savings, it's too late. You've already signed the papers and you're locked in. So here's the bottom line. Refinancing isn't just about the rate. It's about the cost of access. Every fee, every point, every hidden charge is a toll you pay to get to that lower payment. And if you're not careful, that toll can end up costing you way more than it's worth. This is why it's crucial to understand all the fees involved and how they impact your break-even point. Remember, just because your monthly payment is lower doesn't mean you're saving in the long run. If all of this feels overwhelming, that's totally normal. Most people get caught up in the excitement of a lower rate and never dig deeper into what they're truly paying. But you're not going to be one of those people. Stick with me until the end, and I'll show you how to use the worksheet I've created. This tool will help you break down all these fees, calculate your true break-even point, and determine whether refinancing really makes financial sense for you. No more guessing, no more hidden surprises, just clear, straightforward answers that help you make the best decision for your future. Now, here's the moment of truth in refinancing, the break-even point. This is the line where your upfront costs finally start paying off, but until you cross it, you're losing money. For some, it's just a few years away. For others, it's a decade or more. Knowing this number is crucial. Until you hit this point, you're not saving, you're losing. Remember, it's all about the break-even point. But here's the tricky part. For some people, it might take just a couple of years to break even, but for others, it could take a decade or more. And if you plan to sell, move, or make any life changes before you reach this break-even point, you're actually losing money, not saving it. And that's the critical insight most people miss. And that's exactly why you need to know your numbers. So How do you find your break-even point? Don't worry, you don't need to be a math whiz. I've created a simple workbook that takes all the guesswork out of this calculation, and I'm going to walk you through exactly how to use it. You'll be able to plug in your own numbers, your current mortgage rate, your new refinance rate, the total fees involved, and your new monthly payment. And just like that, you'll see your break-even point clear as day. Let's pull up the workbook and take a look together. You'll find the link to the worksheet in the description below. When you click the link, you'll be taken to a page that looks like this. From there, click Make a Copy. This step is crucial as it creates a private copy of the spreadsheet in your account, allowing you to use it anytime in the future while keeping your financial details secure. Once you've made a copy, you'll be taken to your personalized worksheet. Here, you can modify the numbers according to your unique situation. The first thing you'll see is a section to enter your current mortgage details. Go ahead and plug in your current loan balance, the rate you're paying now, and your monthly payment. This sets the baseline for your current scenario so you can see what you're paying without refinancing. You'll start by entering the key details of your new mortgage, such as the interest rate and total closing costs. As you input your data, the break-even analysis below, highlighted in green, will automatically update, showing you how much you'll save each month and how many months it will take to break even on your refinance costs. This tool makes the process straightforward and empowers you to see exactly when refinancing will truly benefit you. Let's consider two scenarios to make this real. Scenario 1. You've been in your home for several years and you're considering refinancing to lower your rate by a small fraction. You plug in the numbers and see that your break-even point is 7 years away, but you also know you're planning to move in about 5 years. That means you'll never hit the break-even point and refinancing would actually cost you money. Scenario 2. You're planning to stay in your home for the foreseeable future and your break-even point comes out to just 18 months. That's a totally different picture. It means refinancing might actually save you a substantial amount over time. By seeing these numbers in black and white, you're empowered to make a decision that's right for your specific situation, not just what the lender or radio ads are pushing you towards. The workbook doesn't just give you numbers, it gives you clarity. It shows you the real impact of your choices and whether refinancing is truly a financial win or just another costly misstep. So, take a few minutes, grab the workbook from the link below, and put your own numbers to the test. You don't want to be stuck wondering if you made the right choice years down the road. The goal is to be informed, make smart decisions, and use the numbers to your advantage, not to the lenders. This is your money, your home, and your future. Don't let anyone else decide for you. If you have any questions about the workbook or need help walking through it, drop a comment below. I'm here to make sure you get it right because the stakes are too high to wing it. Your break-even point is the key to unlocking whether refinancing makes sense for you or if it's just another financial pitfall dressed up as a deal. Beware of no-cost refinance offers. They're rarely what they seem. Lenders cleverly roll those free fees into your loan balance or sneak them in through a higher interest rate, making you pay more over time. It's like putting the costs on a high-interest credit card. No closing costs often means fees are rolled into your loan or covered by a higher rate, costing you much more over time. Here's how it works. Say you're refinancing a $300,000 mortgage. The lender offers to cover your $5,000 in closing costs, but they raise your interest rate slightly to make up for it. That small rate bump might seem harmless at first glance, but over the life of your loan, it can end up costing you tens of thousands of dollars more in interest. It's like putting those fees on a high-interest credit card and paying them off slowly over time. You're not saving, you're just paying in a different way, and often much more than if you'd paid them upfront. Or consider this. Sometimes lenders will add the closing cost directly to your loan balance. So instead of borrowing $300,000, you're now borrowing $305,000. And guess what? You're paying interest on those extra $5,000 worth of fees for 30 years. That's a huge financial penalty disguised as a favor. It's like getting a free meal that you have to pay for every month for the next 30 years. That's not saving money. That's being locked into a financial burden that you didn't even realize you were taking on. This is where the psychology comes in. Lenders know that framing costs as free or no cost is incredibly tempting. It's human nature. We are hardwired to avoid paying upfront, even if it means paying more in the long run. They're betting that you won't think twice about a slightly higher rate or a few extra $1,000 added to your balance. They're counting on you to focus on the short-term gain and ignore the long-term pain. But now you know better. You understand that no cost is just another way to shift the burden onto you without you noticing. And here's the kicker. Those no-cost deals often come with fewer rate options or less favorable terms overall. It's not uncommon for lenders to restrict you to a narrower set of products when you choose the no-cost path, limiting your flexibility and often locking you into less competitive rates. You might be paying nothing upfront, but you're sacrificing choice and potentially better savings down the line. So the next time you hear no closing costs or free refinance, remember that the true cost is just hidden in plain sight. There are no free lunches in refinancing. Every dollar saved upfront usually comes with a price tag attached. The key is to be aware, ask the right questions, and always look at the bigger picture. That's why I've created a workbook that not only helps you calculate your break-even point, but it also lets you compare the so-called no-cost options side by side with traditional refinancing, so you can see where the real costs lie. Don't get caught up in the shiny promise of free. It's often just a costly illusion. Before you refinance, ask the critical questions. Can I handle these upfront costs? How long am I planning to stay in my home? Will extending my loan term throw off my financial goals? These aren't just questions. They're the key to making the right choice. Use the worksheet linked below to get a crystal clear picture of your refinancing decision before you commit. Don't just chase lower rates. Make sure the numbers work in your favor. Have you refinanced before? How did it work out for you? Drop your experiences in the comments. I'd love to hear your stories. And if you're considering refinancing, make sure to download the worksheet below to see if it's worth it. Don't forget to like, subscribe, and check out our other videos for more tips on mastering your mortgage.